Sasha. So as everyone can see here, I've got open, well, hopefully one can see, a page from the Australian Bureau of Statistics. So this is by very much public information. You can go to the ABS and put in lending indicators, and you will get up this page. So we're just going to run through it as Sasha says. I'm not going to go through it in every single graph that's in here, but I think there's a couple here that are really interesting. I follow them religiously, and I think it's probably one of the, as far as a mortgage broker is concerned, it's one of the most interesting source places that you can go to. So these documents were released, as it says here, earlier this month, and you can see that another one's due next month. So they come out every month. So the first graph is this one. So this is, if you're a residential mortgage broker, this is the barometer. Now, I think there's a few things in here that are interesting. The first of all is this, and we've spoken about this before, this big lump here. Now, that is COVID. And that is the Australian government, effectively through quantitative easing, cutting interest rates, trying to pump the Australian economy, trying to keep the economy whirring along. Now, you don't have to be a scientist or an economist to look at this and go, they pumped it too hard. The economy was running along here, and they broadly almost doubled lending. And with the benefit of hindsight, they should have cut it off earlier, the quantitative easing, and they probably shouldn't have gone as hard as they did. It's very easy, though, with the benefit of hindsight. Now, we as mortgage brokers, we love a party. And that is damn good fun for us. That is us in the middle of the party at about 11 o'clock at night. Things are absolutely roaring. It is fantastic. You wouldn't like to be anywhere else in the world. Unfortunately, where we're at now is that the RBA is trying to get us to go home and stop the party. Now, where it's interesting is that if you say, okay, so where have they tried to stop the party, or where has the party stopped before? You have to go all the way back down here to 2008. So it doesn't look so dramatic on this graph because of sort of what happened afterwards. But if you were there in June 2007, lending was running at about 18 billion a month. If you went forward a year, September 2008, it had dropped to 13. It was about a 50% fall. So if you were a mortgage broker back then, having your business turned down, or the underlying business turned down by 50%, it hurt. It hurt big time. Now, that's broadly what I would have expected to happen when they tried to turn the party off this time around. So we were running at 30-odd billion dollars a month. I would have expected it to get down to about 15 billion, so down about here somewhere. Now, in reality, what's happened is we've gone back to sort of 23s, which is sort of back into what you might call long-term trends, but it hasn't actually slowed the party. What's actually now happening is lending is now climbing back up again. This actually is a problem. It's good for us as mortgage brokers because it means the party's starting to get going again, and we're starting to write more tickets. It's great news. Down at the RBA, they are holding interest rates where they are because they're desperately trying to slow the economy. They actually don't want to see this. That's the bad news. They would prefer to see this continuing to head down, certainly not heading up. Now, if you then go to the underlying game, it, I think, gets even more interesting. The RBA has actually got a problem here. So I'm prattling on a bit here, Sasha, and jump in if you want to.
No, I think it's really important, Nick, because I think it's natural. And again, as you've correctly presumed, you look at this from a general perspective and you think, fantastic, lending's going up. So therefore the economy is more stable and the economy is more buoyant. So, and, you know, we were just having a bit of a chat offline about the types of lending and the different patterns and so forth that we're seeing. And I think it's actually really critical to unpack this in terms of this juxtaposition of spending versus RBA's expectations, because obviously that has a myriad of ramifications. So Nick, I would love for you to continue to go through this in detail, and then Stephen, it'd be great if you can also, upon Nick's conclusion, just interject in terms of what you're seeing on the ground.